myself, Dr. J. Pramila, Assistant Professor of Commerce Self, V.V. Vaniya Perumal College for Women, Virudhunagar. In this video, we have to see about subsidiary books. First, we have to know the meaning of subsidiary books. Who are all using these subsidiary books? For small businesses, there is a limited number of transactions. So, journal is practical for the small businesses. And then, single accountant or the owner can maintain the books of accounts. But, in case of large businesses, there are lot of transactions. So, it is an inadequate and cumbersome one to maintain a journal, ledger and books of accounts. So, the alternative way for a single journal is the subsidiary books. And then next we have to see about the types of subsidiary books. The subsidiary books are classified into 8 categories. First, it is divided into 4 categories: day book, bill book, cash book and journal proper. The day books are purchase book, purchase return book, sales book, sales return book. And then bill books are 2: bills receivable book and bills payable book. Cash book is classified into 2 categories. One is cash book and petty cash book. And then journal proper. Next, we have to see the meaning of each subsidiary books in one by one. Types of subsidiary books. Purchase book. All the credit purchases are entered in the purchase book. And then next one is sales book. All the credit sales are entered in the sales book. And then purchase return book. All the goods which are returned to the suppliers are entered in the purchase return book. And then sales return book. The goods which are returned from the customers is entered in the sales return book. And then next one is cash book. Cash book means it enters all the cash receipts and cash payments as well as the bank transactions are entered in the cash book. And the next one is bills receivable book. In the bills receivable book, the bill which are received from the suppliers are entered in the bills receivable book. And then bills payable book. All the bills payable accepted by us are entered in the bills payable book. And the last one is journal proper. It is also called general journal. So, the entries which are not entered in the all the 7 classifications of subsidiary books are entered in the journal proper. It is also called the general journal. And then next, benefits of subsidiary books. It is reduce the work of the cashier or the owner of the company. And the next one is it permits a group work. So, each books are maintained by each person means reduces the work of each workers. And then accuracy. Accuracy can be maintained by way of preparing the subsidiary books. And then better information. If we need information for day-to-day basis or a weekly basis, it is possible only through the subsidiary books. If we need purchases during this, we just go through the purchase book. We know the credit purchases are made in that concern. And then next one is cash book. All the cash receipts and cash payments are entered in the one book itself. So, we need not to prepare the cash account or bank account. And then next, what are the basic documents which are needed for subsidiary books? First one is inward invoice. Inward invoice means it is given by the supplier. Goods which are sent at that time, the inward invoice is given and then price, value and discount are mentioned in the inward invoice. And the next one is outward invoice. The bill which is given to the customer and the goods supplied, price, value and discount are entered in the invoice. And then next one is debit note. Debit note means for the return we have to provide the debit note. The suppliers returned the goods means at that time entered the debit note. And the next one is credit note. The customer returned the goods means we have to enter in the credit note. These are the basic documents which are needed while preparing the subsidiary books. They are the evidence for the concern also. And then cash receipts and cash vouchers are used for the audit purposes. And then purchase book. Already we told that the purchase book is prepared only for credit purchases. So the purchase book is also called the bought book, purchase day book, invoice book and purchase journal. Once the goods are supplied to the supplier, immediately it is entered in the purchase book. At the end of the month or end of the week, we have to total it up and transfer to the purchase account. And then next, sales book. Sales book is also called sold book, sales day book, sales day book and sales journal. For that, outward invoice are used, the basic for making entries, that is the outward invoice. Sales book means all the credit sales are entered in the sales book. And then next one is purchase return book. Purchase return book is also called return outward book and purchase return journal. Goods once returned to suppliers are entered in the purchase return book. It is transferred to the supplier account, is debited. And then sales return book. Sales return book is also called return inward book and sales return journal. Sales returns, once the goods are returned from the customers are entered in this book, it is debited in the sales return account. And then format for purchase book. In the purchase book, it is the evidence is invoice number and the name of the suppliers are entered, ledger folio number is mentioned, is any other details are mentioned here and the total amount is mentioned here. And then next, sales book. Here also date, invoice number, name of the customer. In the purchase book, name of the supplier is entered. In the sales book, name of the customer is entered. And for purchase return book, we have to enter debit note. Instead of invoice number, we have to use debit note. And for sales return book, we have to enter the credit note. Instead of invoice number, we have to enter credit note. And then all the columns are same as well as in the 4 books. Namely, date, invoice number, debit note number, sales book, invoice number, sales return book, credit note number. Here the name of the supplier, name of the customer. Here the particulars column. And other 3 columns are same in all these books. Ledger folio, details and total amount. And then next one is cash book. So the debit side is called the receipt side. Credit side is called the payment side. The cash book is classified into 3 categories. One is simple cash book, that is cash account or bank account. And then second one is 2-column cash book. 2-column cash book is classified into 2 categories. One is cash and discount column only and bank and discount column only. And then next one is bills receivable book. Once the bills drawn by the firm on customers are entered in the bills receivable book, here the personal account is credited. Format for bills receivable book is name of the bill, date of receipt, date of bill, from whom it is received, the drawer, acceptor, where it is payable, acceptor, where it is payable and term cash book folio. And then for bills payable book, once the bills accepted by the firm in the form of in favor of supplier is entered in the bills payable book. Here the personal account is debited. Here the format for the bills payable book is number of bill, date of the bill, to whom it is given, drawer, payee, where payable, term, due date, ledger folio, amount if paid means we have to enter in this column, and then date column, cash book folio column. Last one is remarks column. Then next one is cash book. Cash book is prepared under the triple columnar cash book, cash, bank and discount column. And then petty cash book is a small routine payments are entered in the petty cash book. The triple columnar cash book is mentioned classified into account format. So debit side as well as the credit side. In the debit side, date column, cash receipts, that means particulars column, ledger folio column, cash, bank and discount column separately. And then in the credit side, date column, cash payment column, ledger folio column, separate column for cash, bank and discount. And then next one is general ledger. So general ledger is also called residual book of ledger. So residue means leftover. So among the 7 subsidiary books, the entries which are not entered means that is entered in the general journal. Transactions cannot be recorded in any of the other subsidiary books or entered in the general journal, and it is also called journal proper. Next we have to go through the cash book example for double column cash book. In this problem, double column cash book for measures ABC traders for the month of January 2026 based on the following transactions. First, January 1 started business with cash 50,000 rupees and bank balance 30,000 rupees. For this, we have to enter the opening balance amount. So in the debit side, here the credit side, date column, particulars column, ledger folio column, cash column, bank column and discount column. Credit side also cash, bank and discount. So first we have to enter the opening balance. The opening balance of cash is 50,000 and bank balance is 30,000. January 1 to balance brought down, cash is 50,000 and then bank balance is 30,000. And then next transaction is January 3rd, cash sales of 10,000 rupees. So what is the entry for cash sales? Cash account debtor to sales account. To sales, cash sales. So we have to enter in the cash column 10,000. And then next transaction is January 5, paid rent by cash. So what is the entry for paid rent by cash? Rent account debtor to cash account by rent 2,000 rupees in cash. So we have to enter in the cash column. Next transaction is January 8, purchased goods and paid via check. So check. So we have to enter in the bank column. What is the entry for this transaction? Purchase account debtor to bank account by purchase bank transaction. So you have to enter in the bank column 5,000 rupees. And then next entry is January 12, deposited cash into the bank. So deposited cash into the bank. What is the entry for this? Bank account debtor to cash account. It is the contra entry. That means both the cash as well as the bank account is affected. So it is entered on in the both sides. By bank account, we have to mention the contra in the ledger folio column. So bank account is entered in the credit side. We have to provide the amount in the cash column. How much it is? 8,000. So in the debit side also, to cash entered in the bank column 8,000. Don't forget to put C in the ledger folio column, which mentioned as contra entry. And then next transaction is January 15, received check from X for 4,500. What is the entry for that? Bank account debtor to X account 4,500. Next entry, next transaction, January 20, paid salaries by check 3,000 by cash. So the entry for this transaction is salaries account debtor to cash account. By salaries, we have to enter in the cash column 3,000 rupees. And the next transaction is January 25, due cash from bank for office use. So office use means the entry for this transaction is cash account debtor to bank account. It is also a contra entry. So cash account contra entry 2,000 entered in the bank column, and in the debit side bank account it is entered in the cash column. Don't forget to put contra entry. And then next transaction is paid electricity bill via check. So check means it is a bank transaction. So we have to enter the amount in the bank column. What is the entry for this transaction? Electricity bill account debtor to bank account. We have to enter the amount in the bank column 1,500. So now we have to balance the cash account separately and then bank column separately. After finding the balance from these two columns, we have to enter the balance in the cash book, and then the balance is appeared in the cash column. The total for the cash column is 45,000. Here the cash column is 8,000 only. So 45,000 rupees. So the total is 45,000. The balance is 37,000. And then next one is for the bank column, the total is 64,000 and the balance for the bank account is 44,000 rupees. Thank you.